GMX is a decentralized exchange for trading perpetual cryptocurrency futures with up to 30 to 50 times leverage. GMX is also one of the largest and most popular DEXes on Arbitrum, an Ethereum Layer 2 network that offers fast and cheap transactions. With GMX, you can pay low fees and earn passive income by staking tokens. It also supports cross-chain trading, meaning you can trade tokens from different blockchains without any hassle. But what makes GMX stand out from other DEXs? How does it work? What are the pros and cons of using GMX? And most importantly, how can you use GMX to make money in crypto? In today's video, we will explore the answers to these questions and more. We'll provide an honest and comprehensive review of GMX and look at how you can earn passive income on GMX. Sounds great? Let's get started. GMX was launched on August 2021 as Gambit Exchange, a DEX on the Arbitrum Layer 2 network. After 3 months of launch, GMX saw its trading volume surge to $6.5 billion, with its liquidity exceeding $100 million. By January 2022, the project had expanded its supporting underlying blockchains to include Avalanche, another EVM-compatible smart contract chain that offers fast and low-cost transactions. It's worth mentioning that the founders of GMX are entirely anonymous, so no one really knows who's behind the project. However, it's very likely that X or Twitter user @xdev_10 is the lead developer of this project. Now, the team merged the 4 tokens they had at the time, including XVIX, GMT, XLGE, and XGMT, into one single token, GMX. GMX is now the utility and governance token of the platform, as well as a reward for liquidity providers and stakers. As mentioned at the outset, GMX is one of the largest DEXs on Arbitrum. This DEX allows users to trade spot and perpetual futures contracts for various cryptocurrencies with up to 50 times leverage directly from their wallets. For context, perpetual futures are a type of derivative contract that has no expiration date and tracks the price of the underlying asset through a funding mechanism. This means that traders can speculate on the price movements of cryptocurrencies without having to own or deliver them. GMX supports trading pairs such as BTC to USDC, ETH to USDC, and AVAX to USDC, and more. Users can also swap any supported asset into any position of their choice through a simple swap interface. As you've imagined, GMX has some unique features that make it different from other DEXs. Some of these unique selling points include Aggregate Oracle. GMX uses an aggregate oracle that combines multiple high-quality price feeds from different sources, such as Chainlink, Uniswap, and SushiSwap. This ensures that the prices used for liquidations are accurate and fair, and protects users from temporary price spikes or manipulation. Zero price impact. GMX has a zero price impact mechanism that ensures that users can enter and exit positions at the optimal price without affecting the market. This is achieved by using virtual AMMs, or automated market makers, that simulate liquidity pools without actually holding any assets. The virtual AMMs adjust their prices according to the aggregate oracle and the funding rate, and matches with other users or external liquidity providers. Fee distribution. GMX distributes 100% of its trading fee revenue to its users in proportion to their stake in the platform. Users can stake GMX or GLP, the liquidity provider token, to receive a share of the fees. GMX stakers receive 30% of the fees, while GLP stakers receive 70% of the fees. Users can also earn additional rewards by providing liquidity to GMX pools on Uniswap or Pangolin. Cross-chain compatibility. GMX is compatible with multiple blockchains that support EVM or Ethereum Virtual Machine, such as Ethereum, Arbitrum, and Avalanche. This means that users can trade on GMX using different networks and assets without having to worry about interoperability issues or bridge fees. Users can also switch between networks easily using the GMX app interface. As mentioned, GMX does not have a central authority or team that controls everything. Instead, it relies on its token holders to decide what features to add, what parameters to adjust, or what issues to resolve. The platform uses a democratic and transparent governance system that uses GMX tokens as voting power. The more GMX tokens you have, the more weight your vote has on the platform. To participate in GMX governance, you need access to the GMX governance portal. On this portal, you can see all the pending and past proposals that have been submitted by the community. You can also see the status, duration, and outcome of each proposal. At the time of this video, the GMX governance portal had 70,000 members and no pending proposals. This is to provide spamming and ensure that only serious and relevant proposals are made. You then need to fill out a form and pay a small fee in ETH to cover the gas costs. The outcome of a proposal on GMX is determined by a simple majority rule. The option that receives more than 50% of the total votes wins. However, there is also a quorum requirement that ensures that a notable percentage of the total GMX holders participate in the voting process. This is to ensure that there is enough consensus and engagement from the community. The ecosystem has 3 tokens, namely GLP, GMX, and GM. These tokens play different roles on the platform. GLP works as the token that represents your share of the liquidity pool on GMX V1. When you stake any token on GMX V1, you will receive GLP tokens in return. The more tokens you stake, the more GLP tokens you will receive. The more GLP tokens you have, the more fees you will earn from the platform. On the other hand, GMX is a token that represents your share of the governance power on GMX. Naturally, the more GMX tokens you have, the more votes you will have on the platform. Finally, GM serves as the liquidity provider for the recently released GMX V2 network, which is still in the beta testing phase. The GMX V2 introduces more tokens to the GMX ecosystem, including SOL, XRP, LTC, Doge, and ARB. As mentioned, it serves as a liquidity pool for the GMX ecosystem and introduces other cool features such as isolated pools, the allowance of multiple collaterals, and faster execution speeds. That said, GMX V2 is still in its beta phase and launched only on August 3, so it has yet to be put through the ringer sufficiently. Now for the older network. GLP and GMX tokens are distributed daily to the stakers based on their proportional share of the total staked amount. The distribution rate is determined by the platform's algorithm and can vary depending on market conditions. However, as a general rule, the higher the trading volume and fees on GMX, the higher the distribution rate for both tokens. The GLP, GMX, and GM tokens are ERC20 compatible, meaning you can trade them, transfer them, or burn them on GMX or other platforms that support them. However, if you want to keep earning fees and votes from GMX, you need to keep them staked on GMX. Staking tokens on GMX is a great way to earn passive income in crypto. However, it also comes with some risks and challenges. For example, staking tokens on GMX exposes you to price fluctuations for both the stake token and the reward token. If either of them drops in value, your earnings may decrease or even become negative. Also, staking tokens on GMX requires you to lock up your funds for a certain period of time. If you want to withdraw your funds before that period ends, you may incur a penalty fee or lose some of your rewards. Therefore, before staking tokens on GMX, you should do your own research and analysis and understand the potential returns and risks involved. You should also compare staking on GMX with other passive income strategies in crypto, such as lending, farming, or mining. GMX is a promising DEX that offers some unique and innovative features for spot and perpetual trading. However, like any project, it also has some advantages and disadvantages that users should be aware of. Here are some of them. On the upside, GMX allows users to trade spot and perpetual futures contracts for various cryptocurrencies with up to 50 times leverage directly from their wallets, without having to deal with intermediaries or custodians. GMX uses an aggregate oracle that ensures fair and accurate prices for liquidations and protects users from temporary price spikes or manipulations. GMX also distributes 100% of its trading fee revenue to its users in proportion to their stake in the platform, creating a strong incentive for holding and staking GMX or GLP. Finally, GMX is compatible with multiple blockchains that support EVM, such as Ethereum, Arbitrum, and Avalanche, offering users more choices and flexibility in terms of networks and assets. On the downside, GMX has limited trading pairs compared to other DEXes, offering only a few popular cryptocurrencies. This could limit the diversity and liquidity of GMX in the future. Apart from that, GMX has an anonymous team that hasn't revealed much information about their identity or background. This could raise some trust and security issues for some users or investors. So, as you can see, GMX is not just a platform for trading and earning crypto. It's also a platform for creating and sharing value. By using GMX, you are not only making money for yourself, but also contributing to the growth and success of the platform and its community. That's all for today's video. If you found our video informative, then please like the video, subscribe to our channel, and press the bell icon to get updates on all our future videos.